Hi there, just read this disclaimer please. Alright guys, so yesterday I decided that I was going to make a move, get myself, I'm thinking kind of like once a month I might make a little move towards getting to this target portfolio where I'm balanced in international versus UK and I'm balanced in growthy versus dividendy, and all of my holdings are balanced as well, so everything has an equal weight. And I think the change I'm going to make is because we're in February, we're so close to getting into the next tax year where I can move things from my normal dealing account into my ISA, because I've no allowance left for this tax year. So I figured whatever moves I make this month and next month, February and March, should be within the ISA itself, so that I'm not wasting money on trades which don't shelter more of my money in the ISA. I had a little look through what was in the ISA, and I think I've decided the one I'm going to sell is the JP Morgan Emerging Markets Income. It's not, as you can see by these two lines, there's a small amount in the, sorry, these numbers, oh yeah, they are reasonably up to date. As you can see, there's actually a small amount outside of the ISA there, but I'm going to leave that. What I'm going to do is I'm just going to take this portion, so the 5092 number of shares, sell those within the ISA, and then my plan is, I've got some little rough numbers here. They are rough numbers. Here's my thinking here. I've been looking at selling the excess of BlackRock, because as you can see here I've got target delta, so it's how much above or below the target value of 28 grand each holding is, and BlackRock smaller companies is about 7 grand over. But I think I'm going to hold off making that change. I think I'll let my winner run for a little while longer. Another thing I was thinking of selling was AAS, so what's that, Aberdeen Asia Focus. I was going to do that, but I think that's probably going to be the next one I do, because, well, maybe not the next one, because that's held outside of the ISA, so I'd like to wait until I've got more of an ISA allowance and do that move, selling outside the ISA, buying inside the ISA. So I'll hold off on that one, but because the majority of this is held outside of inside the ISA, I can make this move without it being a waste of a trade. But here's a rough number, so I figure if I sell my portion, so it's 50, if you look up the top right here, it's 5092 of these shares. That's the dividend those 5092 are being paid at the moment. I can then I can put 3 grand in Scottish Mortgage, because I'd quite like to just get Scottish Mortgage and Fundsmith about level. At the moment I've got about 3 grand more in Fundsmith than I do Scottish Mortgage. I was thinking a little bit into Momentum, because that's free to do. Well, not free, but I can do a trade in Hargreaves Lansdown, so I'd add it to the ad hoc Momentum. So this one here, and that one is held in Hargreaves Lansdown, so I don't get charged per trade, I get charged 0.45%. So it's not like I'm adding cost to my portfolio by adding a small amount into the ad hoc Momentum. So if we get just a little bit there, I'm just edging towards more growth stuff, you see. That's the aim. So that is the estimate of the dividends that will be replaced with. So it's a reduction in dividend, but it's bound to be. I'm trying to make my portfolio growthier, aren't I? So it's bound to have a reduction in dividend. I wonder what that is in numbers of minus 132 quid a year. So that's the plan for today. I won't record doing it. I find that I need to concentrate. When I started the channel, I really wanted to show me doing all the trades and everything, but I find that it's just, I need to concentrate on doing the trades rather than making a video. And then obviously when I edit the video, it's hard to hide all of my, the important info that I can't share. Okay, so it's 132, but as it happens, we had Barclays year-end report today, which I didn't know was happening today, but and actually I'm not clever enough to if we go into Invest eGate here, I'm not clever enough to analyse the results myself. This is why I need to get out of individual shares. But the important information There we go. So the remaining dividend for 2019 of 6p will be paid on the 3rd of April 2020. So as you can see here from the Barclays, so for last year it had an interim of 2.5p and a final of 4p. So for this year we've got an interim of 3p and a final of 6p. So if we plug that in here, so as you can see I've got last year's interim of I've got last year's final and this year's interim plugged in there. So I've kind of mixed it up to be the last 12 months rather than the financial year. So for this year it's going to be 3p interim that we've already had, and then it's going to be 6p in April. So that dividend is going from 368 to 473. £105, 132. Oops. So it's kind of offset a little bit. So it makes me feel a bit better that I've been able to update the spreadsheet on the same day I'm reducing my dividend by changing my hold, by selling some of a higher yielding thing. So it's actually going today, just by random, it's only going to reduce my yearly income by £27, roughly. Sheet for dividends that are coming in soon. Change that to 6p. It's going to be the 3rd of April. And we can give it a colour. I just thought I'd talk about JEMI, as I'm selling a lot of it. So as you can see, it's actually got a pretty good profit. 50% it's up. But I mean, apart from the fact that I'm changing my portfolio in general, the reason I'm not so sad to see it go, even though it's up quite a big, it's one of my best performers really. If we actually look at the chart, we'll notice, if we go back 5, when did I buy it? Bought it in November and December 15 and 16, not respectively, the other way around. So I bought it at 81p and 112p. As you can see, we're going to have to go back to 10 years, aren't we? Basically, the upshot is, if you look at the graph for the past 5 years, from here onwards, it's pretty flat. So I think, I mean, what they say, don't try and time the market, don't they? But I think this 50% up that I've managed here is pretty much down to my good market timing. I seem to have hit it right near the low at 82p, somewhere around here, and then 112p when it was back on the way up. So this is why when we look at my portfolio and we see this column here and this column, it's not always indicative of the investment being fantastic and being a really great investment. Sometimes it can just be that I have personally randomly managed to time the market really well, and I think that's what's happened here, because it's pretty flat really, and the dividends have been pretty stale as well. I mean, they've got decent cover there for the past year, but they've not really been rising by massive amounts. I think it's like 2p a year or something, 2% a year for the past 2 years, and it was level for about 3 or 4 years before that. And for something yielding about this, this low, I would probably compare it to something like, well, even City of London is yielding higher than 3.75%. Sorry, let's not use that number. I did a whole video on not trusting those numbers, didn't I? So we're yielding about oh yeah, it was correct, about 3.75%. City of London yields higher than that at 4.35, and that raises its dividend by I don't know, at least 4% a year. So it's kind of been a laggard, I would say, even though it's kind of been hidden as a laggard by the fact that I'm 50% up in it. The other reason I'm getting rid of stuff like this is by picking something with emerging markets in the title. That is me making a investment decision. I'm choosing that region of the world. And I think what I've learnt is I need to not make any investment decisions. I need to let others do it. So if I want to go international, I need it to be international. International. It's not saying Asia or Europe or America, is it? It's just international. These don't have international in the name, but they are just international. They will pick stock from wherever they are wherever they want in the world. And momentum, the randomness of momentum ends up being anywhere in the world. The other thing is, here's the last year's performance of the three, so I'm selling that and I'm buying bits of these two. And as you can see, it is the laggard in the past year. And I'm a bit worried about buying Scottish Mortgage when it's had such a good time in the past, well, literally a couple of months, isn't it? But, I don't know. I figured I just might as well jump in, regardless of how bad the timing might end up being. I mean, it's one of those that just keeps going up and up and up, even after retrenchments. Is that even the right word? But, you know, it could change at any moment. I feel like this could come to a big fall in bad times. But then it might, you know, 5 years after those bad times, it might do another spurt like this, up and up and up. Because, I mean, what if, I'm thinking to myself, this point we're in now could be very similar to this point here. It would be annoying if that was the case, but it wouldn't be the end of the world, because look, we're higher than that point now anyway. Time just cured it. So I figured I'm best just not trying to time the market on this. I'm best just jumping in, even though it's at an all-time high. If it does turn out to be like that high there and go down and then back up again, fine. I can wait a few years to get the performance back. It's a long-term thing, isn't it? Alright guys, so it's a couple of hours later and I've done the trades. So I had a little change of heart. I decided not to put any money into the momentum strategy, mainly because this JEMI sale was inside the ISA, and I have one of these. I can't remember which one it is. I have one of these two inside the ISA. So, but the ad hoc one, which is what I wanted to add the cash to, is actually in the Hargreaves Lansdown non-ISA account. So it would have been a bit awkward to add money to that when I was selling something inside the ISA. So in the end I decided just to buy these two. And as you can see there, I got 2,200, well, these are the real numbers now. So that's the additional dividend from the two purchases. So the sale lost me 259 quid of income. It gained me 148, so overall I've lost £111 in income to go a bit growthier. If you take into account the additional 105 I got from Barclays, that's a loss of about a fiver for the day. So here's the contract notes just to show you. Not much to say really. There's the sale. There's the purchase of Scottish Mortgage, £6.36, which is a bit annoying. Something's happened, it's down to 6.30 now. 1.71, well they're all down a bit, especially my Royal Dutch Shell shares. I think they estimate the oil demand will be lower now than it was the year before, which is the first time it's happened in about 10 years apparently. That's the headline I read. So I don't know if that's got something to do with it, but I don't know. Scottish Mortgage doesn't have any oil companies, does it? That's like the opposite of what they would go for. Anyway, there's the buy of Scottish Mortgage. There's the sell. The buy of Henderson International. Not much to say really. And I've just done the usual updates to the spreadsheet, so you can see there that the sell of JP Morgan emerging made me a profit of 2,693 overall inside the ISA, so there's no tax to pay on it. 64.64%. The one I owned outside of the ISA was bought at a higher price. That's why that percentage is higher than the 50-odd% that I was showing this morning. Okay, so just to get the right numbers, 11.3. So this is the same spreadsheet from earlier on. 11,239.61. As you can see, it's now 11,223 minus 11,233.45. Yep, so I've lost myself £6.16 in income today. Okay, so this morning I was at Growthy. Obviously this hasn't affected the UK versus international because JP Morgan was international, JEMI was international anyway. But this morning I was 33.87% Growthy, and I'm now 34.81% Growthy. So it's just nudged that number a bit higher. It's just the three grand has nudged that number a little bit higher. So I'm just making steady progress towards that, whilst slowly reducing this number. Alright, I'll see you next time then. Have fun. Bye bye.